Hey, hi everyone. Welcome to another video. So today we are going to discuss about film and movie investing. How does this work in India and USA? What is the return on investment on this? Do banks provide loans to movie producers and or not? And how does film or movie investing comes under alternative investments? And we will go through some specific examples how the movie or film investing works in India and USA, and can retail or common people do film or movie investing? Okay, so that's the topic for today. So, film or movie investing in India and the US is an alternative investment model. And alternative investment model basically involves, angel funds, venture capital funds, which put capital into startups, as well as private equity funds, which put capital into private limited companies, and yeah, it also involves real estate investments and film and movie investing also. It also involves art investing also, but yeah, anything that is other than the traditional bonds and equities investing, which can give you exceptional returns, falls under alternative investment models. And there are different types of funds to manage those. Hedge funds manage uh, you know um, big institutions money, and private equity also manages big institutions money, but they do different things. Okay, hedge fund invests in the securities market and makes money, whereas private equity companies put it into companies, and they turn around those companies, or improve the efficiency of those companies, or profitability of those companies, and sell them to other investors. Angel funds give funding to the company to startup stage seeds funding. Venture capital funds, give funding to startups. Those are all different alternative investment models. Real estate investing is there, rates are there, and film investing also is a part of an alternative investment model. And it all these alternative investment models basically carry high risk and high reward. Okay, so you make a lot of money, but that comes with a high risk, and it can be lucrative if done wisely. If you know the game, if you know about particular industry on business, then your chances of winning are high. Okay. Okay, so let's get into the details. What is film and movie investing? So that's film and movie investing involves capital to finance the production, distribution, and marketing of a film in exchange for a share of profits from box office, streaming, licensing, merchandising and TV rights. So, film investing in India, how does it work? The producers raise funds from co-producers, and these co-producers are high net worth individuals, family offices. They also raise funds from financiers, investors, who could be like distributors, studios, private investors. They also raise funds from studios. There are various studios like Yashraj Films, Dharma, etc. And they also raise funds from OTT platforms like Netflix, Prime, Amazon Prime for pre-sale deals. So that's how the producers raise funds. They raise funds from co-producers, financiers or investors, studios, and OTT platforms. And how does the money or the returns come from this investment in films? There's box office collections. So that is both domestic as well as international. Satellite rights, example Star, Sony, uh, satellite rights also bring in money to the producers. OTT rights, also the returns come from that. Music rights, the returns come from that, and brand types and merchandising also the returns come from that. So, what is the ROI potential of movie investing or film investing? So, big hits can give 100% to 300% plus ROI within 1 to 2 years. Average films may give 15 to 25% ROI, but flops can cause total capital loss. Do banks finance films in India? Yes, but selectively. IDBI Bank, S Bank, HDFC, and others have loaned to producers based on pre-sale contracts, cast plus director value, insurance and completion bonds, collateral, IP or rights. Interest rate 10 to 15% typically, and some loans are structured as bridge financing. Can retailers invest in India? Yes, but usually via film funds. There is, it looks like a fund called Carnival Motion Pictures Fund, and production of houses offer co-investment options also. And crowdfunding platforms are there like Wishpari in India, but it's not common for films. Okay. Now, coming to investing in the USA, how it works: independent films raise money through private equity investors and pre-sales to international distributors, product placement deals, tax rebates from states like Georgia and Louisiana. Equity crowdfunding also they go for, like platforms like WeFunder and Start Engine. Major studios like Warner Bros, Universal often finance in-house or through slate financing deals with hedge funds or private equity. Okay, so hedge funds and private equities are funding these movies in US, other than getting tax rebates, equity crowdfunding, pre-sales to distributors. Okay, so RI potential in India is small indie hits like Paranormal Activity, Get Out made 10x to 100x returns. Studio blockbusters return 20 to 60% to investors over a few years. Risk is high. 7 out of 10 films generally go or a flop and they cannot recoup investment. Okay. But do banks provide loans to films? Yes, especially in the US, the gap financing is there for films that have potential. Okay, so partial for films that have partial pre-sales or tax credits, gap financing is there. Bridge loans are also there until pre-sales or tax rebates are received. Collateral also loans are provided, pre-sale agreements, tax incentives, and IP rights. Okay. So in US, there is gap financing, bridge loans, and collateral based loans. Examples of ROI from real films is the Blair Witch Project. 60K it took for the budget and gross revenue was 248 million, 4,000x ROI. Paranormal Activity was budget is 15K, 193 million gross revenue, 12,800x ROI. Kahani in India, 8 crores was the budget, 104 crores is the revenue. 13x is the ROI. Queen in India, 12 crores is budget, 197 crores is the revenue, 8x is the ROI. Is movie investing an alternative investment? Yes, it is classified as an alternative investment, similar to private equity, startups, real estate, art, and collectibles. Okay. In India, it may come under category 2 AIF if structured through a fund. SEBI regulates such funds. Minimum 1 crore investment per investor is there. Due diligence before investing is script. You need to check cast, who is the hero, heroine, and director, producer, all that, music director, and all. Basically, the cast team is good or not. Director, who is the director, genre, which genre it is, and whether there's a commercial appeal for that. Distribution plans, you need to do due diligence and OTT satellite pre-sales also. Completion bonds ensure project delivery. Budget control and production calendar. Revenue sharing contract and exit terms, we need to do due diligence on. Insurance and legal structure. Common people, retail investors can get involved through in India, Wishberry, Catapult, crowd funding platforms, rare influence, partnering with small production houses, investing in film focused AFs or LLPs, USSlated.com for vetted film. So, how can common people or retail investors get involved in film investing? In India, we can use Wishberry, Catapult, which are crowdfunding platforms, but this is rare in film investing. Okay. Partnering could be done with small production houses, and investing in film focused alternative investment funds or LLPs could be done if accredited. USA, there is slated.com for vetted film investments, which is accredited investors. WeFunder and Start Engine are there for equity crowdfunding. Legion M, a fan owned movie studio with the SEC qualified public offerings. Companies, platforms helping in film investing in India: Saffron Broadcast and Media Limited is there. Carnival Motion Pictures Fund is there. Viacom 18 Studios is there. It partners with financiers. And Wishberry is there. Cross Pictures is there. Phantom Films previously offered private investments. In USA, there is Slated.com, Film Hedge, which does loans and debt financing. Bonded Media Capital is there. Legion M is there, and XTR Studios is there. And WeFunder and Starting In is there, which is SEC regulated platform. Final thoughts are, entry point in India for film investing is 10 to 50 lakhs if it's a private deal. In USA, it's 5K to 100K if it's a private, and $100 via crowdfunding. Retail access is limited in India, and in USA, it's growing via platforms. Return on investment could be 15% to 300%. Is a high variance, and it could be zero also. Okay, and or you lose all your capital also, which is most of the cases. Okay, 20 to 1,000%, rare and high risk. Legal complexity is medium in India. In USA, it is high due to SEC and tax laws. Bank financing is available but selective in India, and in USA, it's available with tax credits and pre-sales. So this is film investing, guys, and in India and US, how it happens, whether banks fund it, whether retail investors can participate in it. Okay, so mostly it is done with producers raise funds from co-producers, or HNI individuals or family offices, and financiers or investors who are distributors, studios, or private investors, and through studios and OTT platforms. And they make money through box office collection, satellite rights, OTT rights, music rights, brand types, and merchandising. So that's it for today, guys. So that's the film investing in India. So it's a part of alternative investment, and yeah, that's why I wanted to cover it, because we are covering real estate also, and we are covering hedge funds, private equity, and um, even venture capital funds, angel funds. So film investing is also a part of alternative investing. So that's it for today, guys. Thanks. Have a nice day. Bye.